Welcome along. This is a review of the Wellington region property market in May 2020. Obviously, this was the first month out of major lockdown. Part of the month we were in just out of stage 4, and we were in stage 3, level 3, and then into level 2. And so we did see a period of kind of slow, gradual relaxing of the lockdown requirements, but for a lot of the month, still major restrictions as to what real estate business could be transacted. So we had, for a period of time, a couple of weeks, we were only allowed to do 2 viewings per property per day. So for popular properties, that was very restricted indeed. And then in level 2, we could do open homes, but only have 10 people in the property at a time. And so the popular properties that were well attended would have 40 or 50 or even 60, sometimes even more groups of people. Literally took about an hour and a quarter, hour and a half to get everyone through the property, going very, very slowly indeed. So when you think about that, people had to, wait that period of time and sign in on COVID registers and all sorts of other things. So there weren't nearly as many rubberneckers and just nosy neighbours checking things out, because they had to wait an hour to get into the property if it was a busy one. So it gives you some sense that the market certainly didn't die because of COVID in Wellington. Those punters are all quite serious and looking for properties and willing to sort of endure those more difficult viewing circumstances. But anyway, let's kick into this. So we've been out of lockdown now for, goodness, what was it, be 5 or 6 weeks now. Prices remain strong. There is no softening of prices in Wellington. That's the general feel of things, and that's what the data suggests generally, and our experience at the front line selling houses, that there is no change to house prices in Wellington. And supply remains tight. In actual fact, supply is even tighter. So let's get into this and we can have a look at what's going on. So this is the number of new listings. So it's interesting here, you see this is back about 5 years ago, way back here, where the number of new listings were the highest in about the last 5 or 6 years or so. And since that peak there, the number of new listings, you can see the trend has been gradually downwards, and we are at the lowest levels now that the region has seen in about 6 years or so. So you can see there for the May numbers, 548 new listings in Wellington in May 2020 versus 724 in May 2019. Now, I don't know what people are expecting, but a lot of buyers were saying to me, well, now that we've had COVID, people will be losing their jobs. There's going to be a flood of property coming onto the market. People will have to sell, be worried about things and their financial future and that sort of thing. So there'll be a lot of properties coming on the market. In actual fact, the opposite has happened. And this is because there are a bunch of people who were planning to bring their property to the market, and because they are now uncertain about what's happening in the market and they don't have to sell, interest rates are low, they haven't lost their jobs, they didn't have to sell in the first place, they were just planning to move out of town and retire, or trade up from a 3-bedroom to a 4-bedroom home. Nothing terribly urgent or desperate about it. They just were, it was a lifestyle change. And because of the uncertainty in the market, they're now electing not to sell. So properties that were coming to the market are now being postponed by 3 months or 6 months or 12 months. Any sort of uncertainty in the market will always produce a delay in major decisions being made. And so those people who didn't have to sell, some of them are electing not to. And as a result, you got lower numbers of listings coming to the market. So a reduction of 24% compared to May 2019. In my opinion, this actually is a smaller reduction than I was expecting. I was expecting new listing volumes to be sort of half of what they were going into lockdown. And what this shows is a couple of things, I think. Firstly, it shows that the majority of sellers are confident enough in the market that they are still happy to put their property available for sale. And obviously, if we saw a big increase in the number of listings, then that would demonstrate desperation in the market, or a greater need to sell. And we're certainly not seeing that, but certainly enough people are selling to demonstrate that they are confident in the marketplace. And so I would expect now to see that new listings hopefully will gradually return back up to these kinds of levels up here in the next few months. However, we're still in winter, so listing volumes do tend to be somewhat suppressed. And we also have the election coming up in a few months' time, and that also introduces uncertainty in the market. And so that tends to also have people sit on their hands to a certain degree. So I'm not predicting any huge rush of listings coming to the market in the next few months for the rest of the year. I've been wrong many times before. And this may be one of them, but if for those of you who are buyers out there today, or for the buyers out there in the market, I don't think this is the greatest of news. Listings, I think, are going to remain tight. Feel free to ask any questions if you want. Median sale price up 10%, May 2020 compared to May 2019. April sale price was up 19%, and the month-to-month numbers, as you can see here from the blue bar chart, is quite variable. It goes up and down a little bit from month to month. So you want to look more carefully at the red line, which is the 6-month moving average. So interestingly, although it's up 10% on a year ago, it is lower than the last 3 months or the previous 3 months, or generally lower than the last 6 months. We had one exception in here, which is January, February, March, April, May. Yeah, that's January. Often the January prices are a little lower. You can see it happened 12 months earlier as well over here. So I wouldn't suggest this is indicative that prices are going to necessarily ease off. They may not be rising quite as much as they were before, but they're certainly not going down, is my sense, or our sense at Low & Co, at least in the marketplace. But again, we'll see, I suppose. But yeah, still, my feeling certainly is that prices are still rising quite strongly. How long is it taking to sell? Obviously, when the market is shut down and it's very difficult to actually show properties, it becomes much more difficult to sell. And so things to be expected that things took a lot longer when the property market was essentially closed down. You had properties coming to the market in the 1, 2, 3 weeks before the lockdown came in, and then they sat on the market for some time and couldn't be shown. Not surprisingly, buyers are not too keen on buying a property that they haven't seen. And so as a result, you see this number of days to sell just blowing out tremendously, up to 53 days from 36. But as I say, I don't believe this is an indication that buyers are not keen to buy. They just were not able to buy. So again, I would expect to see this number again quite quickly dropping down in the next couple of months as market conditions return back to normal in terms of our ability to show properties and transact in a more normal marketplace, which is what we're in now, really. Number of sales, again, I find this quite interesting. Generally over the years, we tend to see the number of sales in Wellington sit between 600 and 800 a month over the last 5 years or so, and we're seeing that coming down over the last couple of months. It was higher 5 years ago, and it has slowly been gradually coming generally downwards ever so slowly. And again, the question here is that because demand is reducing, or is that because supply is reducing? And the key indicator there is the price. And if the demand was softening, then what would tend to happen is price would flatline or price would come down. And so I think that's a sign that this is actually a function of a lack of supply, a lack of listings available for people to purchase, rather than a lack of desire to purchase. Nonetheless, we see a big drop, down 40% in the number of sales transacted in the month compared to 12 months ago. Similar to my comments earlier, I think the fact that it's only 40% down is quite surprising. I was expecting volumes to come down 50% or thereabouts. I guess 40% is not that far off, and it's only educated guesswork. But again, I would expect, given what we've seen in the last 4 weeks or so, as market conditions have sort of returned back to normal in terms of being able to transact and show properties, we're seeing good demand out there, and properties are selling well still. So I would expect to see the number of sales perhaps tick upwards again and revert somewhat back to round about these sorts of volumes here, 600, 700 a month. Inventory, I'm not going to sit on this at all, because in actual fact, the number of weeks of inventory was not released for this month, and I'm not quite sure why. I've been in touch with the data suppliers there, and I don't have a response from them yet. So I actually just made that up and said that we were at 9 weeks, because that's what we were last month. So I'm not going to pay any attention to that. We'll see what happens next month. This also is quite telling, and again, you can see around about this point here, this is 2016 when we entered the strong market. The number of listings available on Trade Me coming right down as the increasing demand soaked up the excess supply, and then since then we've seen reasonably stable levels of stock available on Trade Me until about 12-15 months ago, when we saw market tighten further with reducing interest rates, slightly increasing demand, and again, prices continuing to strengthen. So, and indeed, you can see down here, getting below 500 on the moving average on Trade Me for Wellington, sorry, 1500 for Wellington region is very, very tight supply indeed, and that is not changing. So you can see here that even though there was stock sitting on Trade Me and stock on the market that came to the market before the lockdown, and it was not able to be sold, the overall levels, the number of properties on the market did not increase and hasn't decreased either, having said that, but it's very low and stable. So it's not sort of decreasing or increasing in the last 6 months or so. It's stable in that regard, but it's stable at very, very low levels indeed. And as you can see here, 21% down on a year ago. So that shows that, you know, the market is still certainly remaining very tight. I don't know if you noticed, those of you who subscribe to Tony Alexander's, he did an agent survey in conjunction with the Real Estate Agents Institute. And that's the sort of top line summary. And this is not inconsistent with what we're seeing in Wellington. Most agents around the country on the front line felt prices were rising. More agents felt prices are rising now than people felt prices were declining. That is not uniformly the case. And in Auckland, generally speaking, it's a neutral sentiment up there. Only a very small number of agents feel that prices, or slightly more agents, I should say, slightly more agents feel that prices are rising in Auckland than those who think prices are falling in Auckland. So that indicates sort of a more stable market compared to the rest of the country. First home buyers, very, very active. Anything that's reasonably affordable here in Wellington, 600, 700, 800, 900, even $1 million for traditional real estate in reasonable locations, close to services, in decent conditions with, you know, reasonable access and that sort of stuff, proving very, very popular. I think one of my colleagues had a sort of an entry-level home in Johnsonville recently, and they were enjoying 60 groups of people at open home. That's a sort of a 700,000 property, and my partner and I, we've had a couple of very popular listings in the last few weeks, sort of 3-4 bedroom homes that are sort of 900,000, high 900,000s, enjoying 40, 50 groups through open homes, multiple offers, 5, 6, 7 offers on properties. So that sort of more affordable part of the market, very, very busy still. And a little bit of an increase in investor activity, not nearly the same level of increase that we're seeing in the affordable segment of the market. First home buyers very busy, investors coming out of their shell a little bit only, probably encouraged by falling interest rates, and perhaps some recent volatility in the share markets. And so, yeah, a little bit of that. But interestingly, actually, the feedback from agents around the country is that fewer investors are selling. So fewer investors are bringing their properties to the market. So again, that demonstrates confidence in the future of the market, and enjoying the cash flow, I suppose, with the prospect of reduced interest rates in the near future as well. So interesting top level feedback there. Sort of coming up to the end here, but some predictions here. I mean, I think it's going to be reasonably, I think we've seen what's likely to continue to happen. We will just have a continuation of some reversion back to what we think is normal. So some buyers and sellers will continue to hold back while they await to see what the new normality will be in the market. And as they regain confidence in the marketplace, they will bring their purchasing back in, they will bring their selling back in, and so the level of stock will perhaps increase slowly, and sales volumes will increase slowly back to the new normal over the next few months, I'm hoping. Duration to sell might be a little higher also as we revert back to normal, but the big question, of course, is will prices fall in Wellington? So far what we're seeing is the market continues to be very strong indeed, and so there is no sign at the moment, at least, that prices are falling in Wellington or are likely to fall in Wellington. And certainly with the demand we're seeing and with the shortage in supply and new listings in particular, that does not indicate falling prices. Rents, on the other hand, may be slightly different because the unemployment is likely to hit the younger people more than the older, more established people in the market. So perhaps rents will soften a bit. But if prices do fall in Wellington, certainly it's my view they will not be falling far, and certainly not as far as they might, or there might be not as much softening in the market as much as in other locations. And look, it's quite possible that we don't see any softening in prices at all in Wellington. Entirely possible. And long-term fundamentals remain very strong here. So obviously, it's, the handling of COVID has been very, very good. We're now back to level 1. We've got no active cases, at least the last couple of days. I don't believe we've had any more arise. And so all this is boding well. Obviously, some parts of the economy have suffered a bit with tourism and the like, but hopefully we can start to return to a bit more normality, and hopefully the impact of the recession isn't too deep here in Wellington. 2 new cases today. Someone says to me, "Okay, I didn't see that news. Look at that. I'm behind the scene. I'm behind the 8 ball." So that's it I got for you today. Hopefully that's interesting and useful. If you've got some questions, by all means throw them in there. If you haven't got any questions, then I will sign off until next time. In 1 week's time, we will have, of course, the fireside chat, which I believe is on Wednesday week at 5:30 with Peter Ambrose. But yeah, if you want to throw your question in there, I'll take a few questions now. If there aren't any questions, then I will take it that you've had enough. Oh, Anne wants to know, any prediction on interest rates? Goodness me. No. I mean, I just read what all you guys read, and that is that some people are still suggesting there may be some softening in interest rates. But I have to say that if I can fix my interest rates for 3 years or 5 years at under 3%, then that seems pretty attractive to me. And if interest rates do fall further or much further, and I miss out on 0.25% or 0.5%, then I'm not too bothered about that. If I can protect the risk of interest rates increasing, 3% is still pretty low. But I'm sure that 1 and 2 year rates will remain most popular because they're the cheapest. Hans says, do I think the global economic outlook will have an impact on housing in New Zealand? Do I think the global economic outlook will have an impact? Obviously, it's an interconnected global economy we're in here, but I can't help but think there will be a bunch of Kiwis out there, perhaps a bunch of Kiwis who have recently left, perhaps in the last 6 months or so, who have really become unsettled, and things haven't gone as they planned. overseas, wherever that might be, whether it be Europe, UK, Americas, United Emirates, Asia, or wherever, and are thinking, gee, this is not exactly what I signed up for. I'm going to go home as soon as I can. And also those bunch of families who have been over there for 12 years, 10 years, 15 years, and have now married with 2 children, and in the back of their mind, they're thinking, gee, it would be nice if my kids had a better relationship with my parents, with their grandparents, and this might just be the thing that accelerates their decision to come home again. Obviously, Kiwis are not leaving overseas anytime soon. And so I do think that this could be good for New Zealand's long-term sort of net immigration long-term. In the short term, of course, our borders remain shut, and so that will slow that down. But ultimately, I think, because we've handled it so well, and some other parts of the world have really not handled it very well at all, and the risks remain high, and the impact on the economy is bound to be quite severe. I think it could actually bode well for New Zealand. But at the end of the day, gee, I'm just an investor and a real estate agent, and I don't profess to be some guru economist. But I don't know, Hans. That's my personal view. I feel reasonably safe and secure and confident in the New Zealand economy, and Wellington in particular, I think, is more stable than the rest of the country here. Yep. Anything? If you guys need anything else, if you want to have a chat about real estate, of course, about the Wellington market, happy to do so. Easy to find me online, or my contact details anywhere. Sing out anytime. Otherwise, thanks for being here, and you guys have a good evening and a good week, and we'll catch you next time.